Coming up, is too much negativity bringing the markets down? Kramer is digging into why CoreWeave may actually be a metaphor for this moment. Next.
Did you know that your life insurance policy is an asset that you can sell? Hi, I'm Jay Jackson. I'm the CEO of Abacus Life, and for almost 20 years, we've been purchasing life insurance policies from seniors just like you. In fact, you can use the free policy value calculator at abacuspays.com, and in just seconds, you can learn what your policy might be worth.
The premiums were getting unreasonable, so we sold ours.
And for more than we expected.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Selling your life insurance policy can be a safe, smart choice for many seniors. Don't sell or lapse your policy before going to abacuspays.com or calling 1-800-900-PAYS to learn what the fair market value of your policy might be. There are no fees and no obligations, just information. Get real value from your life insurance when you need it with Abacus.
You've got a glow about you, inside and out. Show it to the world with just 10 minutes of self-care. Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at omniluxled.com.
The Harry's team found 3 regular guys.
A good shave shapes the day in a way.
And had them try Harry's for the first time.
This line right here, oh, the flex hinge just went like.
Wow, yeah, that feels expensive.
Then we had them guess the price of an 8-pack of refill cartridges.
40. I was going to say 27, 35.
An 8-pack of Harry's cartridges is $17.
Wow.
I have to switch razors.
Guys who know a good shave can now get a great deal. Get your trial set for $7 at harrys.com/shaving.
I'm actually going to give you guys an offer.
Wait a second. Let me put an offer out there.
Sealing the deal.
20%. Let's go.
18%.
20%.
Oh, are you waiting?
Do we have a deal?
Shark Tank, coming up next. CNBC. Amid tariff uncertainty and downgrades to growth, will the labor market remain steady? What the March jobs report could indicate for the economy and possible future rate cuts. Numbers and analysis. Squawk Box, Friday, 8:30 a.m. Eastern, CNBC.
Today, I just said it. I was getting a cup of coffee at the Bull Market Cafe downstairs. I just said, I wish we were 1,000 points lower already on the S&P 500. You know why? Because waiting for stocks to come down like this is torture. Every evening I leave here with a sense maybe we're going to be okay late afternoon rally. Always help, maybe feel optimistic. Then I get up at 3:30 a.m. I check the futures. It's hideous, just like it will be tonight now that we've seen how high the tariffs are. Then I put on Frank Holland at 5, and the show starts with dispiriting red ink drinking all over the place. I mean, it's just like, and I got to tell you, tonight will be a repeat of the process, and everything is colored negatively because of those ugly futures, which are a shroud on the entire edifice that you see here. Periodically, I'll say enough. It's too overdone, and you should just go buy some stock I really like because it's gotten so ridiculous. You know what? I did that the other day with the new issue. It's called CoreWeave, the data center builder and operator. But for the most part, the data is set by the knucklehead futures traders who never stop trying to get a jump on the presumed negativity and try to knock down the market, and they can do it. I can't wait to see how low they're going to take the market tomorrow. It will be hideous. But let's go back to CoreWeave, because I think this is the perfect microcosm of this market. Let's rewind the tape to the CoreWeave IPO. Everyone loved this thing going to the GTC. That's a big AI fest run by Jensen Huang, head of NVIDIA, which occurred a few days before the IPO. Then people turned on NVIDIA and the data center, boom, right after the conference. Tech started selling off. We started to get negative press about CoreWeave's debt. Well, it needed to issue that debt in order to meet the demand for the clusters of high-end chips it had to buy from NVIDIA because it was making so much money. But nobody cared. Then the Financial Times dug up a bunch of ugly stories that made these guys look unreliable and slapdash, even though everyone I met in Silicon Valley said they were the most reliable and best run, or else NVIDIA wouldn't use them to test their new products before they go out. The biggest negative? Rumors that Microsoft, a huge customer, was backing away from further AI infrastructure build-out. That rumor was false. In reality, OpenAI, Microsoft's partner, was taking all the NVIDIA chips that it could get and all the CoreWeave capacity it could possibly get. And much of the Microsoft AI infrastructure build-out is on behalf of OpenAI, which now has its own multi-billion-dollar contract with CoreWeave directly. This idea that Microsoft was turning on the data center, it was just a total canard. No matter, the CoreWeave deal gets downsized, the price is in the hole, and almost from the get-go, the stock dips from before rallying back to 40, where the deal was priced. Keep in mind, people were originally expecting this thing to debut in the mid to high 50s. Then on Monday, the stock just gets completely hammered again, down to 37. But you know what? Yesterday I said I'd had enough. I was furious. I decided to go on TV and say that this CoreWeave, it's a coiled spring. It's heavily shorted. So I said, if you get any good news at all, or just a congress of buyers, CoreWeave's going to explode. I hit it twice because I knew the truth. Companies need CoreWeave to develop the inference portion of the AI revolution, and inference is what matters because these companies can make money only through inference, not through training. This is the part of it that makes it worthwhile. This is the technology they use to recommend things to you. So CoreWeave is vital because its clients need to make money, and to do so, they need CoreWeave. It's not a free business, people. If you knew the industry, you'd know this. The press, the bears, they just didn't get it. Next thing you know, the stock shoots up to the low 60s, closing at 61 and change tonight. However, there were far fewer shares issued than we could have gotten if CoreWeave had come public at a better time, which makes it much easier for this thing to rocket higher. Now, people are realizing that CoreWeave's the glue that holds the data center together. It's the preferred vendor. That's what makes CoreWeave the perfect metaphor for this moment. When you let the futures make you as negative as you can, as they will tomorrow, then it doesn't take much to get this market to roar. Keep in mind, as you get futures make you as negative as you can, as they will tomorrow, then it doesn't take much to get this market to roar. Keep in mind, as you get sick of the tariffs and tired of all the stagflation talk, or the people who constantly $37 to $64 run in 2 days, I'll take it. Like I said, there's always bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
We will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating.
U.S. futures are slumping after U.S. President Donald Trump imposed a minimum baseline 10% tariff across the board on all imports, but higher in some cases, much higher for specific countries. Now, China getting slapped with new reciprocal levies of 34%, which is on top of the 20% imposed earlier this year. Chinese ETFs selling off on the news in extended trade, as you can see right there. And ETFs linked to India, South Korea, Japan, also all lower after hours. Vietnam's ETF, the worst of the lot, it's down 10% after getting slapped with reciprocal tariffs of 46%. Good morning, everybody. It is a Tariff Thursday on Squawk Asia. I'm Martin Sung, and welcome to our U.S. viewers as well this morning. So there's basically only one story today, and it's tariffs. Reciprocal tariffs on the rest of the world. U.S. President Donald Trump announcing a universal baseline tariff of 10% on all of America's trading partners just hours ago, plus higher reciprocal tariffs on a long list of countries. We'll have details coming up in just a bit. But first, though, take a look at the reaction in markets. Futures are up and running and rolling at this early juncture, a Thursday in Asia. It's a Tariff Thursday, indicating what looks like a down start when Wall Street gets back up and running several hours from now, tonight Asia time. Take a look at ETFs as well, linked to U.S. stocks. They are slumping as well. well in extended trade, down 2, 3, 4% in some cases. And China ETFs also sharply lower after the president slapped an additional 34% tariff on Chinese goods, which is on top of the 20% imposed earlier this year. Take a look at the K-Web China Internet ETF right now. It is looking like this. Change the charts to give viewers a look at that. That's coming momentarily, but meantime, let's move on and take a look at ETFs linked to India, South Korea, Japan. They are also all lower after hours. The Vietnam ETF is the worst performer. It's down about 10%. After getting the country got slapped with a 46% tariff. Now, here's what the president had to say at the event at the Rose Garden earlier this morning. Take a listen.
All of the foreign presidents, prime ministers, kings, queens, ambassadors, and everyone else who will soon be calling to ask for exemptions from these tariffs, I say, terminate your own tariffs, drop your barriers, don't manipulate your currencies. They manipulate their currencies like nobody can even believe, which is a bad, bad thing and very devastating to us, and start buying tens of billions of dollars of American goods. Tariffs give our country protection against those that would do us economic harm.
Right, can't forget Mag 7 stocks as well. Take a look at how they are shaping up in a phrase not too well, with the exception, top left-hand corner of our beautiful wall there, the NASDAQ. And this is the finishing number. It actually ends up about 0.9%. But after hours, though, the Mag 7 not doing so well. Losses of up to 7.5% in the case of APL or Apple. All right, let's get across the reaction out here in Asia, China, Japan, South Korea, also Southeast Asia. We've got all our reporters on the story. Emily Tan, start us off with what it means or could mean for China and how bad it could get.
Good morning, Martin. And President Trump called it tough love. He held up this big chart with all the numbers and percentages broken down with the alleged percentage in which those countries charge the United States, and then, of course, the percentages of which the U.S. will charge in their tariffs, reciprocal tariffs. President Trump saying, I have great respect for President Xi, but they were taking tremendous advantage. Let's hear what he had to say about China.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset?
So that 34% will become effective on April the 9th. CNBC has confirmed with 20% that the United States had been charging China already. So February 4th, they imposed 10%, March the 3rd, an additional 10%, and then come April the 9th, it'll be an additional 34%, bringing the grand total, as far as we know, to 54%. What we're seeing, could be lowering tariffs to Beijing if they supported this divestment of TikTok to a non-Chinese company. So we are going to be watching out for that. And also the announced today, this morning, Asia time, was the end to the de minimis exemption. So those are packages less than $800 and that did cause a little bit of confusion in the Hong Kong market, of course, at the post office, because all parcel deliveries were suspended in Hong Kong for about a week when that first came to light. China has warned about retaliation if it goes ahead with reciprocal tariffs. But since 2016, we have seen the Chinese lower their exposure to the United States. Of course, that was when the first round of trade war had taken off. Since then, they are sending far fewer goods to the American market. So we are going to be watching out what happens here when the market comes online in about 2.5 hours from now. But of course, we also want to keep coverage on what's happening in the other countries. And for Japan, Lynn has her eyes on that.
Yeah, hey, we heard the U.S. president talking about Japan, calling Japan our friend. while slapping the reciprocal tariff rate of 24%, which when you look at that placard that he held at the Rose Garden for Japan was a discount, because what they had calculated on what Japan was putting on them was at 46%. So these are according to the calculations coming through from the US, of course. And then, of course, keeping in mind that 25% on autos as well. That's set to kick in tomorrow, Asia time. Keeping in mind, of course, there are a number of exceptions to this 24% rate on the reciprocal on particular sectors like chips, lumber, pharma, etc., with the expectation that the president would be announcing some more tariffs on those particular sectors as well. From the White House perspective, like Japan make it difficult for US automakers when it comes to compliance with certification, with standards and so forth. In terms of the reaction, and I've been getting, a couple of reactions from those over in Tokyo, analysts, it was worse than expected. The question will be, can they carve out some of this or be able to negotiate this down as well? But I'll leave it there and we'll head over to Sherry Kang, who has the reaction in terms of South Korea.
Yeah, and I was just messaging with James Hong just now from Macquarie Capital, of course, a friend of our networks, I would imagine. And, he was talking about how this could put South Korea's auto parts makers in a very vulnerable position, because not a lot of them have the capacity, at least at this point in time, a local production capacity in the United States. So a very low percentage of them do. So that could be a problem in terms of the supply chain here. And 25, as you see on the board there, is the number that South Korea is getting this time around. He made it clear, he as in President Trump made it clear, that he wants to sell more U.S.-made cars to South Korea. Although I do have to point out, as we were getting that Rose Garden event, the White House also released a press complimentary press release in terms of explaining how these tariffs will be implemented. So for sectors like autos, steel, as well as semiconductors and some of the other that were mentioned in the press release, they are not going to face additional tariffs on top of this 25% of auto tariffs. So basically, to make it simpler, for autos in South Korea, which could be really the big sector that could see potentially a lot of damage here, that they're only facing 25%. The White House is clarifying that. In the meantime, rice was mentioned. That was interesting to me as well. So this is an area that was a non-negotiable for South Korean side when they were negotiating the Korea-U.S. Free Trade Agreement years ago, because of the cultural importance, the political attachment for South Koreans. So yes, South Korea and the U.S. faced their tariffs in a lot of sectors, with the exception of rice. But that was mentioned by President Trump as something that was unfair to the U.S. side. So I think that is something that we need to be watching in terms of potential modification and amendments to the free trade agreement. And we've got the South Korean government meeting this morning trying to talk about their tariff responses. Acting President Han Duck-soo, for one, saying that he is presiding over the meeting that is happening this afternoon with private sectors as well to discuss responses to U.S. tariffs. In the meantime, let's get out to JP Yong in Singapore to discuss the impact on Southeast Asian countries. There were many of them that were mentioned this morning, JP.
Absolutely, Sherry. And this is something that all members of the ASEAN bloc, at least, will be watching out for. All 10 members, including that of Timor-Leste, the 11th member, the 11th country in the region that isn't part of the RUP, but everybody has been hit by a tariff across the board. And with no surprises that Vietnam itself had the highest tariff levied on it, or arguably the highest tariff levied on it among the six big economies here in Southeast Asia. Also, another reason why we saw the Vietnam ETF among the hardest hit actually overnight and getting hit by the worst of the sell-offs actually on those Asia-exposed ETFs. Take a look at the tariff list here. You see here that Vietnam is going to get hit by a tariff levy of about 46%, with Thailand coming next at 36%. Now, not everybody, even those that happen to have trade deficits with the United States, also got hit. We have Singapore getting that baseline tariff of about 10% on its exports. But again, it's also not exactly lined up with who has the biggest trade surplus against the United States. You have to remember that Indonesia has a smaller trade surplus with the United States, but they actually have a higher effective tariff rate than Malaysia at about 32%. Now, we also have to remember that the frontier economies in Southeast Asia also got hit and arguably also facing higher tariff risks, actually. Take a look at the likes of Cambodia, for instance, facing a 49% tariff at the moment. You have the likes of Laos also facing a 48% tariff, and Myanmar, which is just coming off that devastating earthquake. They are now waking up to the reality that their exports to the United States will now be facing 44% tariffs actually on them. So again, no one is spared, and there is nowhere to run, nowhere to hide out in the out in Southeast Asia. One thing just to add here, Martin, is that according to the Bank of Thailand, if you're expecting a tariff of more than 10% on Thai goods, they're expecting GDP growth this year to fall from 2.5% growth to just 1.3% growth. Well, the tariff is now 36%. So whether or not there's going to be an outsized negative impact on one of the more sluggish economies in Southeast Asia is another big question we have to ask folks out in Bangkok as well.
Goodness. Okay, thanks, JP. And girls as well. So listen, guys, you know, we've been going 100 miles an hour for like 70 minutes now. I think it's probably a good time to maybe take a step back and slow things down and put things into perspective from, you know, probably what this one market guy was telling me is the worst of all possible outcomes, because it just gets so much more layered and complicated. But my question to you guys, and I want to know what you think from people you've been talking to, is how much room is there for negotiation? Because it sounds bad now, but this is, as I'm given to understand it, just a starting point. It needs to go on from here. I hope it's going to go on from here and won't escalate. So, Sherry, let me start with you. How much room is there for, let's say, the South Koreans to push back and negotiate with the Trump administration?
I think the Trump administration thinks that there is a lot of room to negotiate. And, you know, they lay it all out as well in this report that I keep talking about by USTR. They're talking about some of the non-monetary trade barriers. They're talking about beef, more access to more beef cuts, and some of the digital platform companies as well. The competition policy that is quite strict, relatively speaking, in South Korea. And then, like I said, rice was, mentioned by President Trump himself. So I think all of this is laying out all these possible room for negotiation.
Yesterday, Treasury Secretary Besson had come out with a list of what he called the Dirty 15, and this was a couple of weeks ago. So, you know, and we knew who some of these names were and how hard potentially they could get hit.
Yeah, and to be and consistently as well, 4 of those countries on the Dirty 15 happen to be the 4 with the biggest trade surpluses with the United States: Indonesia, Malaysia, Thailand, and Vietnam. But as you can see, the Philippines and Singapore, which are not supposed to be on the Dirty 15 list, they were also hit by tariffs. The Philippines facing a 17% tariff, for instance. So there is no other. Again, it doesn't mean that just because you're not part of that Dirty 15 does not mean you're getting some punitive measures on the trade front. Now, we do know that a number of governments in Southeast Asia have scrambled. You know, Vietnam sent their trade minister to meet with the Treasury and the Trade Representative's Office in the United States to discuss ways of alleviating things. We got the MOC out in Thailand last night saying we are willing to cut down on our tariffs with the United States. And I think the big bet for some of these export-reliant nations in Southeast Asia is if we do cut the tariffs, as President Trump has said mentioned at his speech, will that actually result in alleviation of these tariffs as well? But what that will do to domestic economies there who might be looking at these tariffs perhaps as a way to sort of cushion themselves against more competition in the United States is another big question as well.
Indeed. And Lynn, I wouldn't be surprised if Shigeru Ishiba, the Japanese Prime Minister, has already booked his ticket on Japan Airlines to D.C. right now.
Yeah, indeed. I mean, that was something that he was talking about just a couple of days ago to open those channels again with the US president, because there was a very positive first summit. In fact, post-summit, the Prime Minister talking about the fact that he thinks that Japan could evade these tariffs. But obviously, as we've seen today, that is certainly not the case. But I will pick up on some of the things that Sherry was talking about when it comes to agriculture, when it comes to cars, also add in their defense and also for Japan, the currency as well. These are potentially the things that the US president is looking for in terms of movement here, and perhaps more of those announcements like Stargate and SoftBank and Hyundai and others as well. But as Eswar Prashad also spoke about earlier, it's going to be hard for countries like Japan because of their position, relatively speaking, in terms of having that leverage, whether we're talking about Japan's history and its reliance on the US for security, as well as its geographic location being so close to countries like North Korea as well as China.
Yeah, and guys, you know, we're going to get to the big one, and that is China, which my colleague Eamon Javers calculated now faces tariffs of up to 54% on its imports into the U.S. So get into that a little bit later on. Thanks, guys. All right, let's get to markets and take a look at Sydney, just coming online for Thursday trade, Tariff Thursday. It is off to what looks like a pretty negative start, down close to 2% there. Australian dollar, AUD, at 62.52. Australian Prime Minister Anthony Albanese, one of the first global leaders with a response saying U.S. tariffs were, quote, totally unwarranted, and he said he will push up, and he said the tariffs will push up prices for American households.
Allergy season is Navage season.
So when you're dealing with allergies and you've got that stopped up feeling and you can blow your nose and it's a little bit better, using the Navage takes it all away. Put the water in the top chamber, put the pod in, close the lid, put it in your nose, push the button, you're done. It's natural, it's effective, it's fast, probably the best investment you could make if you suffer with allergies.
And for stuffy little noses, pick out the new Navage Baby Aspirator, now at Walmart in the baby department.
Let's be real. When you hear studs, you're thinking tall, dark, and handsome. At Ritani, we're talking diamonds. Brilliant, flawless, with the clarity you deserve. No confusion, just the perfect pair at the perfect price.
Ribs, chocolate cake.
You're gonna get sick. You need pumpkin.
I love pumpkin.
It's not food, it's pet insurance. So when you get hurt or sick and you need expensive medicine or surgery,
pet insurance from Pumpkin can help.
Go to pumpkin.care.
Which is a better way to earn your college degree? Commute to college and fill your gas tank, get stuck in traffic, drive in bad weather, try to find a parking space, walk a half mile to class, or learn online at South University. Learn any hour, any day, from anywhere. And that's convenience. That's South University's online programs.
Online was very important to me because I am a full-time working mom of 6-year-old twins.
Scan the QR code or call
1-800-891-6094.
For 50 years, Four Seasons has been turning dreams into reality.
From our innovative louvered roof with smart home technology to architecturally stunning lattice pergola covers and stylish sunrooms, we offer a vast range of products to fit your needs and budget. Whether you're looking to create a cozy retreat, a family fun zone, or a gathering place for friends, we've got you covered. Celebrate our 50-year anniversary with incredible savings. 4 Seasons, 50 years of quality, innovation, and best-in-class service.
Welcome back, Squawk Asia on a tariff Thursday. I want to get a look at bonds and show you how yields are pricing. The benchmark 10 is down at 412.69, short end at 384.19. So the entire curve has floated lower. CNBC's Rick Santelli has the full bond market report. Take a look.
Good morning, Asia, Australia, New Zealand. Well, if you looked at the data today, whether it was ADP or factory orders or durable goods, everything was better than expected. The revisions, for the most part, were all better than expected, and not in a huge way on either side, but still better. And the markets turned higher. Interest rates followed stocks higher in addition to that better data. And for tomorrow, in lieu of the information and maybe less uncertainty, tomorrow's fundamental economic releases may have a bigger impact in the market. We'll have initial continuing claims like we do every Thursday. And I would like to underscore, as a big follower of those claims, Treasury yields have an outside day today, meaning higher yields than yesterday, lower yields than yesterday. So that expansion, called an outside day, usually means trend reversal. A trend reversal of current trends would mean higher yields. Now, the entire curve from Tuesday to 30s has higher yields as the day progressed. Reporting from the CME HQ, I'm Rick Santelli, CNBC Business News, Chicago.
And in case you missed it or are just waking up and joining us, the big story today, there's really only one. President Trump earlier this morning, Asia time, announcing tariffs on the rest of the world. And the market reaction, I got to say, has not been good. Futures are up and running and rolling at this early juncture. Thursday in Asia, handicapping a down start when Wall Street gets back up and running several hours from now tonight to Asia time. I want to show you ETFs as well, linked to U.S. major averages. They are... okay, let's flip the charts to give viewers a look. It's on the way. Put a little bit of grease on that. They should be pretty ugly last time I checked. So, okay, I tell you what, let's move on. Let those charts catch up. Meantime, I want to show you the damage in mega caps, the Mag 7. Fair bit of downside to those names as well. There you go. Apple probably worst of the lot, down 7.5% on AAPL. Tesla down by almost as much. NVIDIA down more than 5%. AMZN down closer to 6%. Let's bring in Leslie Marks.
When you look across the board, across the different regions that were impacted, as you know, I come from Canada, so I would say maybe a little bit of surprise that Canada and Mexico were spared what could have been worse, but certainly much worse tariff impact on Asia, regions in Asia and Europe.
You know, I got to say, the baseline going into this, or ahead of the announcement, had been, or rather not the baseline, but the best case scenario was, look, we get one flat number, right? Even if that gets changed, et cetera, at least that's easier to work with. Right. In the event, though, we got the baseline 10, right? Country-specific tariffs, and then also sector-specific too. So it becomes like a layer cake and much more complicated. So I would think that this is probably potentially the worst case scenario. Would you agree?
Well, I think that we almost hope This is the worst case scenario in a sense, but there is a chance that there is more to come. And we have certainly heard from Treasury Secretary Bessent that if countries retaliate, which they most likely will, many and most cases, they will look at it as quite unfair and punitive.
Indeed. Okay, listen, stay right there. We'll come back and pick it up rather with Leslie Marks in just a little bit. We're back in 2.
Squawk on the Street, weekdays starting 9 a.m. Eastern, CNBC.
All right, time to do some selling. That's going towards rent. Oh yeah, that's going towards girls' night. And that
like Wegovy and other GLP-1s for as little as $25 a month. Text BOTTLE to 200-300. That's BOTTLE to 200-300.
I'm Dr. Michael Strasberg. I'm a dentist. I've been practicing for 44 years. In my practice, we talk to patients about their health, their nutrition. People think of the mouth as something separate from the rest of your body, but the healthier you are, the healthier your mouth is. You know, when you're young, your mother would say, eat your fruits and vegetables. But as you get older, that sometimes gets shoved to the side. And Balance of Nature has been one of the best supplements to fill the void in the fruit and vegetable area. When I did this, I felt a noticeable difference. I felt better. Anytime you can feel better, I don't care what age you're at, you know, that's a big plus. I don't stuff anything down, anybody's mouth, but hey, this has worked for me. Why not try Balance of Nature? Simple, easy, take it, and it's going to help.
Get 35% off your first order as a preferred customer. Call 1-888-487-8808 or go to balanceofnature.com and use discount code TV8.
Welcome back. It's a Tariff Thursday here on Squawk Age. I want to show you shares of Ford in extended trade. This is how they're doing. Not so well, down to about 0.6%. $10.09 a share on the car giant. It immediately responded to President Trump's tariff announcement, telling Reuters, the news agency, that it will be offering vehicle discounts across multiple models starting April the 3rd, which is when auto tariffs are supposed to hit. Let's get to gold now and show you how the yellow metal classic safety trade is pricing. $31.59, so we're up 0.8%. And if I'm not mistaken, okay, we are actually off, but still near the most recent record highs, which Capping, as you can see there, it's going to be pretty ugly at the start, down about 1,500 points, closer to 1,600 points potentially. We've got dollar yen. Dollar is taking a pretty hard knock against the Japanese currency, down about more than 0.8%. We're at 147.96 now on the cross. Back with Leslie Marks, CIO at Mackenzie Investments, still with us around the desk here at the SGX. And Leslie, talk to me about that 200 billion Canadian dollars under management that you have. You know, in light of what we know now, at least some of the numbers, right? How is that likely to change your positioning? What are you going to be doing?
Well, very good question, and this is all new news as of today, right? 4 a.m. for us. But, you know, we'll be gathering our Global Investment Committee and discussing the latest news on tariffs and the impact, particularly on two things. One, the expectation for GDP growth, global GDP growth, which I think those expectations are going to have to come down now. And then the second will be the inflation side of the equation. Now, of course, as you know, the Federal Reserve has talked about that inflation from tariffs will be viewed as transient. But, you know,
they've said that before. It didn't work out so well.
Yeah,
right?
it didn't, and here they go again. But you know, I think that, yeah, that's a dangerous strategy to view tariffs as only a transient impact on inflation, because other countries, as we talked about earlier in the segment, will put in reciprocal tariffs. And so we could see inflation be a lot stickier than just transient. And so I think that, you know, from our perspective, looking at how our portfolios are positioned today, as of early February, we moved away from our overweight in equities, and particularly an overweight towards U.S. equities. We neutralized that exposure because we were weighing the risks of inflation and slower growth. And now I think that those two conditions are more acute and more serious and significant. And so we'll be looking at whether or not we should be adjusting that positioning for even greater uncertainty.
Gotcha. So your positioning to basically offset or neutralize slower growth as well as higher inflation. Your base case is still based on what we know now after the Rose Garden announcement, is still no recession, or?
Well, I the probability of recession.
I'm curious how you're positioned, how you were positioned in EM, emerging markets, right? Biggest one of them all, of course, China. And we know that, for example, hedge funds ahead of the announcement had really withdrawn or pulled out of EM. What about yourself?
Yeah, so we'd certainly been a little more negative on EM, particularly because of the expectation of greater tariffs in China. I mean, when the administration came in and after the election in November, we really looked at the focus to be China. We did not anticipate the broad-based focus that tariffs have, you know, where we are today, and you know, particularly seeing Canada and Mexico in the crosshairs of tariffs. You know, we did not anticipate that.
You know, the whole thing about using the currency as a buffer, probably not that. But here's what he had to say. Take a listen. We'll continue talking after that.
Great.
If I was in China, I would find ways to create economic growth endogenously. That would take tremendous reforms to their pension system, as an example, and to take their household savings rate down. I'd say in Canada the same thing. A dramatic tax cut here, below U.S. levels. That's the best way you can actually fight back for any country, in my opinion. I don't want to get into a trade war with the United States. It's a zero-sum game. However, countries should now
how do they stimulate growth within their own economies? And two, how do they look at making trade agreements or arrangements with other regions or countries that, we saw, our own Prime Minister, Mark Carney, he traveled to Europe. He's had conversations in Europe and he will around the world, and other regions will do that as well. And I think it's really important that if you as a country believe in the value of trade as far as advancing your own country, that you set your own course.
Do you believe that, the situation right now, especially post this announcement from the Rose Garden,
very much a service sector economy. I mean, I'm stating the obvious, but the reality is bringing manufacturing back to the United States is not going to be as easy as announcing, capital is really going to change the way we'll view the S&P as if manufacturing becomes I think that's going to be very difficult to see a turn of events happen that quickly. Have to respond. It's not going to be easy. You think about it. There are goods that are being shipped as I said earlier, they've gone on the record and said that they view that tariffs will be transient when it comes to inflation. So that almost suggests that they're opening the door to being potentially more dovish if more Fed cuts being priced in. It's early days, right? We're 3 hours into this news and digesting it all. And as we've heard, there will be more to come on sectoral tariffs as well.
Indeed, we've only just begun. Leslie, pleasure talking to you. Thank you for dropping
Thank you,
by.
Martin.
Appreciate
Thank
the
you for
time.
having me.
So when you're dealing with allergies and you've got that stopped up feeling and you can blow your nose and it's a little bit better, using the Navage takes it all away. Put the water in the top chamber, put the pod in, close the lid, put it in your nose, push the button, you're done. I love Navage. It's natural, it's effective. It's fast, probably the best investment you could make if you suffer with allergies.
Pick up
Stick egg and some fake grass.
Hey.
But a box from nuts.com that says Easter is here.
For free. Visit otter.ai or download the app.
to say what exactly the implications will mean, but it will bring disruption for sure, because Trade reacts to those tariffs, to those duties, and while trade, we say trade is over the last few years, post the COVID pandemic, when a lot of companies tried to de-risk their consumers, because I don't think many companies will have.
And I got to say this, right? And potentially the risk is, right, that this it always finds a way somehow, right? Seeps through the cracks and the crevices, etc. If you compare what happened
prior to the first Trump administration, but it got intensified really when the first tariffs were levied on China from the US. A lot of companies thought about how can I de-risk We don't think that they will reverse that just because of the announcement last night. Okay. In fact, we might rather see more companies who are the transportation capabilities, how long are the lead times, what are the distances for your supply chain. So tariffs is an important factor, but it's only one factor for companies to consider what to do with their supply chains.
Let me ask you, do you see companies, including your clients, right, having to come up, maybe they already have
it will continue to grow in the next couple of years. The growth might slow down, but what we are positive positive about the development of global trade, independent of what happened last night.
Oh, now that's an interesting take. Okay, listen, Nikki, fantastic talking to you. Thanks for dropping by. Appreciate your time and your thoughts. Keep safe. Come see us again very soon.
Thank you very much, Martin.
Pleasure is ours. All right, Nikki Frank there from DHL Global Forwarding. APAC joining us here live at the SGX. Right, we're counting down to the Asia market opens this tariff Thursday. We've got Japan and South Korea joining trade at the top of the hour. So about less than 8 minutes away from that. Asia exposed ETFs sold off sharply and extended to trade, pointing to now, all this market upheaval after reciprocal tariffs got unveiled in the Rose Garden several hours ago. But will those tariffs help boost government revenues, U.S. government revenues? CNBC's Steve Leisman has some projections. Take a look.
President Trump's economic advisor have said the tariffs could bring in as much as $600 billion a year. But the Nonpartisan Tax Foundation believes it could reduce the expected revenue tariffs will yield. Already, several forecasters have downgraded U.S. GDP forecasts because of the coming tariffs. Goldman says it would be a 0.4% hit to GDP and wrote this week, the fiscal package is unlikely to offset the GDP hit from the tariffs. The White House has said that tariffs are tax cuts, but because they're believed to be mostly paid by U.S. businesses and consumers, economists treat them and score them like tax hikes. Steve Leisman, CNBC Business News.
Been turning dreams into reality. From our innovative louvered roof with smart home technology to architecturally stunning lattice pergola covers and stylish sunrooms, we offer a vast range of products to fit your needs and budget. Whether you're looking to create a cozy retreat, a family fun zone, or a gathering place for friends, we've got you covered. Celebrate our 50-year anniversary with incredible savings. 4 seasons. 50 years of quality, innovation, and best-in-class service.
When you hear studs, you're thinking tall, dark, and handsome. At Ritani, we're talking diamonds. Brilliant, flawless, with the clarity you deserve. No confusion, just the perfect pair at the perfect price.
This right here is confidence in a bottle.
It makes me feel so much more confident than I've ever felt.
They are some of the hottest videos on social media. Those videos claiming to instantly get rid of bags under your eyes. And net figure